What's up, everybody? Today we're diving into the world of stock trading, and I'm going to share 3 simple steps to help you trade like a pro. Now, I know what you're thinking. Stock market, Wall Street, isn't that for guys in suits yelling into phones? Nope. It's 2023 and anyone can get in on the action. Whether you've got a few $100 or a few thousand, learning how to trade can be your ticket to building wealth and securing your financial future. So buckle up and get ready to take control of your finances, because in this video I'm breaking down the barriers to entry and giving you the knowledge to trade with confidence. All right, step 1 to trading like a pro is picking the right stock. It's like choosing your starting lineup for a fantasy team. You want the heavy hitters, the ones with potential. Remember, we're not talking about gambling here, we're talking about investing. So forget those get-rich-quick schemes and penny stocks. They're super risky, and honestly, only about 1 in 500 actually pan out. Now, you might be thinking, Graham, why bother with stocks at all? Why not just keep my money safe in a savings account? Well, let's talk inflation. Every year, the prices of things go up, right? That means the money you have saved is actually losing value. If you had $5,000 in savings a year from now with inflation, it might only be worth $4,700 in today's money. But if you invest that $5,000 in the right stock with an average long-term return of, say, 10%, you could be looking at $5,000 to $500. That's the power of investing. Before you jump headfirst into the market, you've got to figure out what kind of trader you are. Are you the fast-paced in and out type, or do you prefer to sit back and watch your investments grow over time? There are 3 main types of traders. First up, we've got the day trader. These guys are like the stock market's version of a sprinter, buying and selling within the same day. They live and breathe market trends, always on the lookout for quick opportunities. Many day traders wake up early, catch up on the financial news, and look for stocks with high trading volumes so they can get in and out quickly. Then we have the swing trader. This type of trader holds on to stocks anywhere from a few weeks to a few months. They're looking for those swings in the market, those predictable ups and downs. For example, if a company is about to announce amazing earnings, a swing trader might buy in a week before the announcement and sell once the good news sends the stock price soaring. On the flip side, if a company is expected to report bad news, a swing trader might wait for the stock to drop, then buy in at a lower price. And finally, we have the long-term trader. These are the patient investors, the ones who believe in the long game. They hold on to their stocks for over a year, often choosing companies they believe in, companies that are growing and expanding. They know that as the company's revenue grows, so too will the stock price, often with the added bonus of dividend payouts. Chapter 3. Mastering the entry point. Okay, you've found your perfect stock, you know your trading style. Now for the crucial part, finding the right entry point. You don't want to overpay, right? It's like buying a pack of gum. You wouldn't pay $1.45 for a pack that normally costs 99 cents, would you? But if you found it on sale for 60 cents, you might even grab a couple of extra packs. Same goes for stocks. You need to figure out the stock's true value and make sure you're not buying it for an inflated price. Remember, trading stocks isn't about gambling. It's about making informed decisions. It's like a surgeon in an operating room. One wrong move can have consequences. So how do you find those stock bargains? Well, there are a few ways. One method is to check out PDUFA calendars. Now, these calendars list stocks that are currently in clinical trials for new drugs or treatments. The final phase of approval is called the PDUFA date. And if a drug gets approved, the stock price can skyrocket. You can easily find these calendars online. Another strategy is to keep an eye on earnings dates. Knowing when a company is going to announce its quarterly earnings is key. Generally, if a company reports positive earnings, their stock price tends to go up. And lastly, believe it or not, global events can impact the market. Wars or major conflicts often cause the stock market to dip, but once a resolution is in sight, prices often rebound. Remember, the stock market is like a living, breathing thing. It's constantly influenced by a million different factors every single day. Take your time, choose wisely, and watch your investments grow. So there you have it, guys. 3 simple steps to trade stocks like a pro: picking the right stock, finding your trading style, and mastering your entry point. Now, I know all this might seem like a lot to take in, but that's okay. The most important thing is to just start. Begin by researching different companies, follow the market, and maybe even consider using a practice trading account to get your feet wet without risking any real money. Remember, even the most successful investors started somewhere, and with a little knowledge and a lot of patience, you can achieve your financial goals too. So get out there, start learning, and happy investing.